Yeah, hello and welcome to another update video about Natgas. So first of all, let's take a zoom out and take a look at the higher level scenario. Then we're going to zoom into the micro count, which worked out really exceptionally well, which isn't always the case, yeah. But when it works out, you get these hot runs, then really you can nail every support area, every entry, every target. And that is the case because this impulse that started to the upside has really from the beginning adhered very well to Fibonacci support levels and targets. Okay, and that hopefully gives a lot of you the idea why technical analysis is just purely superior to any fundamental analysis, because fundamental analysis doesn't give you any price targets, it doesn't give you entry points, it doesn't give you Fib support levels, and in the end the market is always the leading indicator. The fundamentals often just follow. There are enough examples for that. Enough examples. Fundamentals always follow. Yeah, if you look at, we're in a recession, or people are whatever freezing, or people need gas, and it's all. You need to wait for the signals in the market. The market is always leading, and nothing predicts the market as good as the market itself. And that's where we are, and it is generally the case. It's the case with interest rates. It's the case with recessions, the economy, the state with news. It's the market that makes the news as well. If you are in a state of the market, for example, in a wave 2, just assume now, you have an index like the S&P 500 and you're very, very low in a wave 2, which is a very, very, which is basically a bear market, in a wave 2, depending on which time frame you're looking at. But typically in a wave 2 on a significant time frame, when you're getting towards the end of it, that's when you see most negative news. When the market then starts to move up, the news are still bearish, and then you make your first wave 1 up, you make your first wave 2 down, news are still bearish, and when finally the fundamental analysts have realized that the trend has shifted, then the news get more positive as well. But it first starts subconsciously, the trend change. But that's just sort of a quick, shouldn't waffle that much. Okay, let's take a look here at the scenario. First of all, this is the higher time frame, and we moved up here in a wave 1. Just for everybody who sort of missed the previous context, we moved up in a wave 1 into June 22. We then came down in an A wave, moved up here in a B wave, coming down in a A, B, C. Yeah, let me just rethink. A, B. No, I need to think myself. Did I? Oh no, wrong. No. The ABC, this is the low of the A wave. I don't know where I moved that C wave to. That shouldn't be down there. If it is, that shouldn't be down there. The yellow C wave should actually be. That's why I was confused. No, the ABC structure finished off this A wave. Then we moved up in a B wave and now come down in a C wave. And this C wave is subdividing into 5 waves. So I go to the 4-hour chart, then we can see the subdivisions a little bit better. In this C wave, we came down in a wave 1, where we bottomed in December. At the time, we called here a rally, which peaked, I think, at the maximum it should have done. And it maxed out what it could do. Then we came down from the 14th of December onwards and started to crash down, basically, okay? And we came into our support area, and sort of just before the support area ended here, we turned around. And here is very interesting to see, for everybody who's been watching over the last few weeks, the bottom, I think, was called very accurately, and we called the bottom by using, first of all, the Elliott wave triangle that we identified here. So remember the video that I make when the video when we talked about this triangle while it was in the making. I gave you a target, it hit the target spot on, eventually then subdivided lower, but the triangle told us basically that the end is near, because a triangle always appears as the last, or appears as the pattern before the last move of a cycle. And this was the last move of a cycle, a 5-wave move down after this wave 4 peaked, came down in a wave 5. At least that's how it looks like currently. So this happened, and then we called the target here of $2.08, I think it was, and it came down to $2.07 or something. by measuring the length of 1 to 3 and to add that length to the top of the wave 4 to calculate the length of the 5th wave, and it worked very well. And since then it has just adhered perfectly. Yeah, textbook impulse down here in a 1-2 setup. This was an entry point I gave you. Again, these are no financial advice. I can really only give you the areas where I believe the price is going to turn around. Yeah, I'm not telling you to buy or anything. Then we rallied, reached spot on. It's absolutely, I mean, this is really something for a textbook, this impulse. I mean, you do see them often, but you don't see them on these time frames necessarily to that degree of perfection. Why is that? Because nice 5-wave impulse, you see that on a lower time frame. Crystal clear 3-wave move down. The wave 2 here reached the 61.8 retracement absolutely perfectly, nailed it absolutely perfectly here. 218 level, yeah. I mean, it reached 218.2 or something, 218.1, it's fine. We then rallied in the 3rd wave. I gave you a target for the 3rd, reached it spot on. It's the 1.618 extension. It's the most likely target for wave 3. Yesterday we were here. I mentioned to you that there was no clear signal yet that the 4th wave has started, but we can assume it as long as we stay below the wave 3 low, because this is the typical target, and we saw a reaction already, and it did come down here. Told you it's probably more of a shallow wave, which it was, because we retraced only basically into the area between the 23.6 and the 38.2 fib level. It's a rather shallow correction. Here, for example, it retraced the 61.8 retracement, and this was only the retracement between 23.6 and 38.2. Okay, so it's a shallow retracement, as you would expect it from a wave 4, and then we reacted to the support area, and we are already in wave 5. So what can I say? Yeah, it's doing what it's supposed to be doing, and we have 5 waves to the upside. Absolutely amazing. This is now a good confirmation that the low was in. Now this will complete a 5-wave impulse. I would say this 5-wave impulse is probably the A wave. There will then be a B wave, which could become another entry point, but I can't give you a target yet because we have no confirmed top for the 5th wave. But I'm going to give you my wave 5 targets in this video. And afterwards we should see a wave C to the upside. So someone asked me in the previous video, do I think we come down and make another low? At the moment, yes. My primary expectation is that this is part of an ABC rally to the upside. I gave you the targets for that in the previous video. Let me just put those targets back on the screen. These are the targets. Just need to... Okay, between 319 and 447 pretty much, yeah. So these are the 3 levels: 319, 399, no, 390, sorry, 319, 390 and 447. If it goes above 447, then I will have to assume we do not make one more low, okay? But bear in mind what we said down here. We expect fairly strong upside in both the scenario where we will eventually make another low and in the scenario where the overall low was already in and we're now rallying, getting back into a bull run, which will take it eventually above the December highs. No, it was actually the August highs, yeah, so above $10. Then we talk about inflation, yeah. Then we talk about inflation, and I don't want to know what happens with our heating bills, okay? But this is what will happen either now or after another low. My take would be after another low. The reason is as well that I think this needs to scale out a little bit more, yeah, time-wise, because this wave 1 took really a long time, and that the wave 2, I would like it to be a bit longer, but okay, no, it was already here. June 20, when did it start? It started in June 22, that correction, okay, so, I mean, would be nice to have it a little longer, okay, so maybe we get that wave 4 and then the wave 5, and then eventually we'll turn around. We'll see, but the point is that this was an amazing entry down there. We just had another entry which was amazing as well, and anybody who entered, and that's the beauty of it, you can just move up your stop losses. Whenever we break above a previous high, you can always move up your stop loss below the previous swing low. Then you just get stopped out in profit at some point, yeah. But anyway, you know, let's talk about targets. And by the way, thanks a lot for all the positive comments, because this was really, I think it helped a lot of people, these entries and the turnaround point down there. Bear in mind, at some point these patterns will break, so you can trade them until they break. You get these hot runs where really the analysis nails everything, but then at some point it will just be destroyed. So don't, the B wave down there, the B wave to the downside will probably be more difficult to forecast, because a B wave is always difficult. It can be correct. It is a correction, so it could be triangle. You know, it can become a double zigzag. It can become a single zigzag. It can become all sorts of stuff. So this will be more difficult to forecast. So I wouldn't necessarily trade the B wave short. I would just wait for an entry to trade the C wave to the upside. Yeah, if you're trading this on a shorter time frame. But then again, what is the target for the fifth wave here? So key targets for the fifth wave. To calculate them, we take the length of waves 1 to 3 and we go to the low of the fourth wave. And what are the targets? So my very first target would actually be set 276. So bear in mind what we're doing here, it is really just the last wave of this A wave. Okay. What are the targets? So the very first target would be 276. Find that a fairly likely one. The reason is that when the third wave is extended, you typically see waves 1 and 3 have a similar length. Now I can also use that to just measure the length of the wave 1 and go to the low of the fourth and look for the 1-to-1 ratio. Would actually take us to 282, 283. So I'm going to highlight all of these targets now on the chart, and then you need to be watching when we reach them if the chart is reacting. So first target 276, second one 829, and then 1 second. Let's go back to the previous fibs. So I'm listing them all, and then we talk about the most likely one. Okay. Oh, I did have some. See, I had them already on the chart. Okay, then we've got 291 and then 315. Okay, so most likely for me, I mean, I can give you a zone. Yeah, we've got these three levels here between 276 and 291. So 276, 283, and 291. They are, in my opinion, the most likely ones. And the extension target would be 315. So the same way that I gave you support areas here, giving you a target here in this range, okay? Between 276 and 291. So that's where we should see a reaction, ideally somewhere here, and then come down in a B wave. When we get there, I will be, and we see a strong reaction, I will be able to give you maybe tomorrow or so, or the day after, a support area for the wave 2, for another entry point to trade the third wave. But for now, it's looking good. Looking at indicators, maybe the 4-hour, you can see we still have, we prevented here bearish crossover on the MACD, so that's good. 4-hour chart. Just trying to look at the indicators. I mean, you see a slight bearish divergence now on the 4-hour chart. RSI, you typically see that in the fifth wave, so it's fine, but nothing. Yeah, and here bullish momentum is still increasing. So for now, we have no indication that this move to the upside is stopping. Even though here on the daily now you're getting towards the 50 level. Now that could provide some resistance on the RSI. Here on the 1 hour, you see the bearish divergence unfold as well. Do we actually? Yeah. Making a higher high on the price chart, lower high on the RSI. Just always a warning that we are in the fifth wave, yeah, that we're getting towards the end of it. I mean, you need to think, if you enter down here, really, so even if you just entered at the top of my box, I mean, you made like 22% without leverage in like a few days, okay? So you need to think what you do. Do you take partial profits or not? Because how much more can it go up? I mean, in the let's say the worst case, it just will just move up another 2%. 2 to maybe 7.5%. That can be decent, but this is now the place where risk increases. In the very best case, it can go up. I mean, don't get me wrong, these can always extend out. So I don't want to tell you this has to stop at 315, but it's just all about likelihood. So I would never sell everything, but maybe take partial profits at some point. I mean, there's no indication this is stopping, but you always need to think about when do I take some partial profit or just move up your stop loss. Okay, yeah, and that's where we are with Natgas. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.